Hello and welcome to an episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. On the Woo front, one cool thing to check out is if you go on woo.org and scroll down to the execution quality analytics, there's a nice dashboard here that allows you to compare your overall cost of trading on Woo versus other exchanges. There's a pretty transparent and I would say fair and robust methodology when it comes to comparing Woo with other exchanges. You can do perps and spot. And I think this might get an update soon. I'll find out from the team. But overall, it's pretty reasonable and accurate. And if you look at BTC, for example, and you can pick any altcoins, spot, futures, etc. You pick the trade size and the period for the data. You can see that, for example, on BTC 100K, Woo and Kraken are essentially neck and neck. If you look at ETH 100K, kind of jumps between Woo and Kraken as well. And this is just all to generally demonstrate the point that I know it's quite reasonable, if anything, when you see an exchange partnership to think, oh, here we go, some dog shit exchange and these influencers are getting paid money, so on and so forth. But we've been with Woo for a while, and that's for good reason. And the quality of the execution, as well as the transparency dashboard, which is here somewhere, these are really core features that I think any centralized exchange should have, and we're not here for no reason. So if you haven't checked it out, thinking it's some crappy influencer exchange with no depth or liquidity, hopefully this can change your mind. If not, that's fine as well. It's your life. But if you want to support the show, the most direct way to do that is via the link in the description, and by maybe saying nice things in DonAlt's comments. He gets very upset over Twitter sometimes. He'll deny it, but he's a softie at heart, really. Anyway, we're going to focus primarily on BTC ETH Sol, I think. On the monthly BTC front, unsurprisingly, nothing has changed. We had another monthly close. The monthly close was above support, but didn't really go anywhere. So we're essentially now in 1, 2, 3, 4 full months, a full quarter of consolidation. The bull target argument is that, hey, we're just consolidating and recharging above a key level before we shoot off for the next leg. So essentially you have impulse, consolidation, impulse, and this is the consolidation. How dare you be bearish? It's so obvious what's going to happen, etc., etc. The bearish argument is basically the inverse of that, which is, hey, we had an all-time high breakout and the market hasn't gone anywhere in 4 months. This distribution, it's all going to zero. The next support is at 47K. It's all over, right? So take your pick. I'm more of a monthly close type of person, but after 4 months at this monthly level, I'm not going to be getting monthly setups here unless it's some sort of sweep through all the lows into a positive monthly close, or a monthly close that actually breaks support, which would then set a bearish bias. Absent that, it's a bit of a nothing burger, and reading too much into these monthly closes that haven't resulted in either strong failed breakdowns or closes below the level, it's just led to more consolidation. So until there's some resolution on the monthly, I don't think it's the best time frame in the world. The weekly time frame is a bit mixed. I mean, we keep wicking into the 60k area. Just fully transparently, as I mentioned, I'm probably just not going to trade the lower bounds of the 60k range. I'm not super interested in trading levels that have been tested 5, 6, 7, 8 times. And if that means that I missed the Pico bottom, that's fine. Can always buy back higher and maybe get some quick resolution. I mean, in these instances, even if you've bought the bottom, the resolution of that trade has probably fallen far short of expectations, right? So it's one thing to get a really nice entry and if you're proud about it. It's another thing if you keep getting so-called nice entries, but the market doesn't do what you want it to do. And I think in most cases, the 60k range low buyers are expecting breakout, continuation, all-time high trending environment. That's a kind of implied assumption of buying the range low, that it's going to make its way to the midpoint, to the range high, and eventually break out. And that's been a sort of tougher pill to swallow at every instance where we keep getting these range high rejections. So I think buying range low support is a form of proxy bet on the range resolving to the upside. I just think that's not the only way to take that trade, right? For example, you could go for a range midpoint, breakout buy, and then hold it into resistance. You could break out buy resistance with tight invalidation, or break out by a close above resistance with tight invalidation, arguing that, okay, maybe now things are going to pick up. But if you're targeting, if the core idea is that this consolidation is bullish and it's going to do this, the areas to do business for this idea aren't limited to the range low, right? You could always do it around the range midpoint. You could do it at the range high. You could do it the consolidation off the range high. There are a million other ideas. And for me, a level that's been tested this many times, the probability that I trade it properly is not very high. And I just generally have a rule for myself after all this time that levels that get beaten to death like this, after the second or third test, I just won't really engage with them in the same direction, right? So super beaten up resistance after 3 or 4 tests, I generally don't sell it and look away. Same with support after 3 or 4 tests, I generally don't look at it and look elsewhere. So that's just a general overview. As far as the technicals go, It kind of depends on whether you subscribe to Don's cluster thesis, which is to say that there's a weekly resistance level that was support, we closed below it, and then this is the retest week of 63.64. If that's your view, then there's nothing particularly bullish about this chart because the close was below that structure, and this week rallied into the structure, has since been rejected, and in doing so also spiked previous week's high. So if Don is correct, then I mean we shouldn't be getting weekly closes above 64k, 63.1 if you're being aggressive, and your target for that type of rejection would presumably be the next weekly area of support, which is, I don't know, 51k, 47k monthly, something of that nature. I'm not entirely sure whether this weekly cluster is going to play out and if we're finally going to get volatility expansion. One way to look at this consolidation, now that we've had a few more weekly closes, is just like we did on the monthly and on the daily and now on the weekly, if we simply take the highest close and the lowest close, that gives us a pretty straightforward range to deal with on a closing basis. I mean, even if we take the sort of first low made during this range as a whole, we still haven't had a close below that. And if you take the lowest close, we haven't violated that either. And if we look at that on the daily, it kind of gives us the same picture we were just discussing, right? Just a bit cleaner and with a more of a skew towards recent price action, where 71.3 is the range high. We get the same midpoint, which is always a good sign if you're updating your ranges, that historical levels still bear some relevance at 66.3, pretty much the same area as before. I mean, we talked about this level on Monday markets a couple of weeks ago. So, I mean, for me, that's essentially the same level. And then the range low on the weekly lines up with the daily cluster low as well. So all good signs that the levels haven't really gone anywhere, and we're just getting a slightly more accurate view of them. One other level that's worth talking about before we jump back to the weekly and the daily is, as you'll recall, one structure that we discussed on Monday markets was this resistance here. And the argument at the time was, if the range low bounce is going to be strong, coming from monthly, weekly, daily support, whatever, it should have no issues breaking an intraday level of resistance at 63.3, 63.4, and that's more or less exactly where the rejection took place. So at the moment, this looks like a test of high time frame support that's getting rejected at low time frame resistance. Now, from a market structure point of view, it's not the most terrifying thing in the world, but again, if it leads to yet another test of 60k, nothing has changed from what I said earlier as far as I don't want to trade beaten up levels like that. And if anything, this rejection has given me confidence, at least on lower time frames, insofar as giving weight to 63.3, 63.4, which is to say that if this daily bounce is going to be more than fleeting, it should have no issues getting above there, and then maybe we can start to structure an intraday entry onto a high time frame idea, which would be some version of 63.4 break on the intraday. You can then reasonably target range midpoint and potentially a range high, right? And that's kind of an example of taking a lower time frame level in a higher time frame context and thinking of how that might play out, and even taking it from that intraday level to the range midpoint on BTC, that's 4-5%, right? You could probably expect higher moves in altcoins. To the range high, that's 12-13%. And when we're dealing with low volatility, we kind of need to adjust our expectations for what qualifies as a meaningful move. Now, if your view is that, hey, this consolidation sucks, I'm going to wait for it to break and go do stuff with my family and adhere to my real world obligations, I very much agree with you. I mean, I've started going to boxing 3 times a week, for fuck's sake. That's how I'm treating this range, if that's any indicator. Not for Crypto Fight Night, don't worry, just so I'm, somewhat more fit beyond just gym, elbow flexion, knee extension nonsense. But those tangents aside, as far as trading levels focus for this week, I'm keeping an eye on the range low, but not really a huge fan of it. There's unlikely to be a long trade that comes from it. On the intraday side, 63.4 is the pivot that I'm looking at. If we're going to have a good week or good successive weeks, it would need to flip that, and at that point the weekly time frame starts looking better as well. So more of the same, to be honest. Like, if we really zoom out, how much is there to update within the context of this consolidation, right? Until it really breaks down and accepts, or until it really breaks out and accepts, we're more or less going to be stuck with medium conviction ideas, even around the range midpoint. That might seem like a important inflection point on the lower time frames, and it is, but if we just jump one time frame higher and zoom out, the midpoint isn't some make or break type of thing. Whenever you're dealing with these large consolidations, even if they take a while, as this one has, the core areas still become this is balanced, and the interesting stuff happens outside of balance, right? Or at least attempts to break out from balance that don't go anywhere. And we've even exhausted those, right? We've had a bunch of goes at resistance, a bunch of goes at support, and at this point, the only trade idea that's likely going to crop up on my radar is break and acceptance. And to be clear, I'm not super interested in shorting BTC, even if I do get proper breakdown signals on this thing. For me, that would be a sign of, okay, this range is exhausted. Now the priority becomes, where do I buy spot, potentially perp-based positions to play a huge bounce or even like a large trend continuation type of move. That's really the priority, right? Even if you're bearish something, it always depends on the higher time frame context. Sometimes you could be, bearish for a period of N weeks, but then that just gives you an avenue to be bullish for N plus whatever weeks, right? So in this context, even if there's a big BTC breakdown signal, my priority won't be shorting it or catching a piece of that. It would be, hey, where's this thing going to end up? And wherever that is, the resolution for a large range like this will probably be quite big, which would mean quite big discounts and testing high time frame levels of support that we haven't had for a while, right? And the same goes for the other side. If this resolution is to the upside, then similar assumptions just get flipped on their head, which is to say we had a very long consolidation. Finally, we're breaking out from that consolidation. We're moving from balance to imbalance, and then I can expect the kind of all-time high trending crazy move that people were hoping to get from BTC, right? But in any case, for me personally, the range is exhausted. There are pennies available in front of steamrollers to pick up, and certainly there are more than pennies if you're trading altcoins. But on the BTC front, 60k has lost my interest a long time ago, and I just want to share that in a pretty straightforward fashion. Because again, the pressure of social media is you always need to have a position, always need to have a view, there's always a trade to be taken, but sometimes you're like, man, I'm kind of tired of this, and the moves are getting smaller, it's a bit shit, like, give me something else, I'm tired of balance. And for me, usually after 2 or 3 high time frame tests of a level, I kind of take off my gloves and think that's enough balance / range-based trading. Give me some imbalance and we can talk. And this thing has not done that yet. So that's really it for BTC. Yeah, that's really it. So just as a reminder, if there's one thing to take away as far as high time frame levels go, I would focus on highest close weekly, lowest close weekly, which gives us 61.4 as the range low, 71.3 is the range high, 66-ish as the range midpoint. And if you're looking for some intraday color on top of this large consolidation, the only other reasonably tenable level that I can think of for medium-term trading is this 4-hour range high that we discussed previously at 63.3, okay? Realistically for me, I'm either going to just leave this alone completely, as I have been, or if I'm looking, if there's a lot of aggressive short participation here, and I don't see a ton of evidence of that at the moment, but if this thing gets really sold into the range low and then starts to squeeze above this 63.3 level, there might be a kind of pop play to the range midpoint, but even that is kind of low time frame diddling, right? I mean, it's pretty close to forcing a trade, if anything. But for those of you looking for intra-week commentary, those are the 4 levels. High time frame 71.3, high time frame 61.4, medium time frame 63.3, high time frame 66.4. Okay. Yeah, that's kind of it for BTC. Doesn't look fantastic, but not enough to put on a trade, right? It's one thing to say, this thing looks a bit whatever. Another thing to actually risk your capital on a position. One other final interesting thing I'll mention is this daily pre-breakout level at 63-ish. That kind of comes close to the intraday level we talked about as well. So I wouldn't just treat it as a random 4-hour resistance drawn out of nowhere. At this point, this is a pretty decent daily level, and it's also where the most recent high came in, right? So there's a fair bit of confluence at 63, 63.3, whatever. I think if you're really aggressive, looking for signs of strength, and you're not willing to rebuy the range low, that's a decent pivot / inflection point to keep an eye on for this trading week. Hopefully that makes sense. Leave a like on this video if it does. ETH BTC, still not interested, not going to get baited into caring about this thing for the time being. I mean, this is pretty much the same structure all around. The ETF speculation hasn't been particularly sticky. It doesn't look terrible, doesn't look amazing. It's just more of a mental burden. On the ETH USD front, monthly time frame hasn't been useful for a while. The weekly traded into this cluster, which is nice, but I feel like the trade there has already played out, which is to say if you were blind bidding the first test of the cluster, you kind of got your bounce into the first trouble area, right? From support to resistance, and voila, that's it. That's the more straightforward portion of the trade, because you had a fresh test of support with resistance some way away. If we look at that same trade now, support is no longer fresh. Now we're reacting off resistance, and we're stuck between these two levels, right? Last week, the focus was on the daily time frame, and the idea that this thing was essentially being walked down, and market structure was bearish, right? Breakdown of the range, retest, breakdown of the range, retest, breakdown of the range, retest, and that structure hasn't shifted yet. If it does, that would set up an interesting lower time frame trade opportunity, just to take advantage of a potential daily market structure shift. But until that happens, I don't really see any other setups apart from the bank robber bounce into resistance, and that one's already played out, right? I would say that if you're, again, focused on intra-week trading, I would keep an eye on this daily level at 3,400. If you're going to be making arguments for a squeeze or anything else, they need to come off the back of this daily resistance turn to support, and then it's a game of, hey, we're going to come for these this triple top. Essentially, it's quite a nice level, to be fair. You know, this is the old shelf, triple top there, etc. But the earliest that becomes actionable, I think, is a daily break of 3,500-ish. Absent that, the structure basically hasn't changed of walking down, and the more or less obvious trade has played out as well. So right here where the market is right now, not a ton to do, personally. Yeah, and as is often the case, you know, we have this as our daily level, as we discussed, but if you look on the intraday, as always, if this is like a really good indicator as to whether your level selection is good. If you have a good high time frame level, it should be very significant on lower time frames. And sometimes the hint works in reverse as well. If you see a really nice, you know, if you're mostly focused on intraday time frames and you're looking for a stronger signal or more confluence, and you jump, you know, you take your 4-hour level and look at it on the daily and it seems to line up, those tend to be pretty good signs that you're in the right area as far as finding attractive levels to do business. Now, that's just one part of the equation, which is level selection. Then there's trade identification. That's a mouthful. Trade execution, trade management, position sizing, all of that type of stuff that I've covered on my own YouTube channel. But purely in terms of, is my line make boying area correct? Looking for time frame confluence tends to be one of the better ways of finding out quickly, sort of a easily accessible heuristic. On the Solana front, keeping its gains sort of post ETF announcement. I quite like this daily level at, where does this come in? At 156. I wasn't so fond of the range lows here. Surprise, surprise, ended up being the bottom. I don't know if we talked about this on Monday markets. I think I said at the time that because the 135 was lost, it'd be nice to see some sort of spike or whatever, but no such spike was found. It was more of a straightforward test, and the reaction's been pretty good. So if this is going to continue, it needs to break the first and nearest overhead level of resistance on the same time frames. This is daily range low, this is daily range high. If you miss the range low bounce, there's not an immediate trade to be had here for continuation. Generally speaking, you know, if you miss the range low bounce, your next option is either a mid-range pullback, which is medium conviction, or range high breakout and acceptance. And that for me only happens above a 157. So for medium to lowish time frame trading, I think that's pretty good. It's also like a fairly self-evident zone on the 4-hour. So again, that time frame confluence coming into play. But the story of the market for a lot of these setups is that we got a test of these high time frame levels and we're getting a bounce. I mean, BTC looks a bit worse for wear. ETH, not so great. Solana's been strong, but I wouldn't personally chase it up to 157 until I become convinced that this is going to be a really strong move, and the earliest bit of evidence for that would be closes above 157. And at the very least, at that point, you just set an invalidation on the breakout candle low and just hope momentum continues. If you want like a... And again, I'm just rambling here, so if you enjoy the rambling portions, let me know. Generally speaking, if I'm being lazy with the market, which isn't a good thing, but you know, if as per my tweet, my priority is to put on a position. If there's like a high time frame level that I'm looking at, and I'm like, oh, is the daily going to close or whatever else? Well, you know, is there evidence of acceptance above it? And there's just like kind of a fat daily candle that materially closes through resistance or back inside the range or whatever it may be. A lot of the time, if I don't want to start finagling the lower time frames for like an extra expert precise entry, I'll just say, it's a strong enough signal for me to take some liberties with my entry and stop. So I will sometimes, depending on the setup, my conviction, a bunch of other factors, but purely sort of mechanically, I'll try to enter on a dip from the daily open after the daily close, right? So this is the daily close. Sometimes the next day starts to drive down, not necessarily to the level itself, but you just get a move below the daily open. I'll try to buy that, or buy when it flips back above the daily open, depending on the setup. But then in terms of mechanical stop placement, especially if I'm just trading spot and I want a piece of it for peace of mind and not to think about it, I will just take the low of the candle that broke resistance and use that as my invalidation. And if, a lot of the time, if that gets violated, then the probability that the breakdown, that the reclaim was genuine, falls. And so, you know, if this, it's not common for really strong markets to like mega reclaim, big breakout, and then the next day just come out and take out previous day's low. Sometimes it happens if the close is very marginal. So you have a daily close, which happens kind of at the level, it's not too far away. And at that point, you know, especially if you've got a flat bottom, the low can get tagged. But generally speaking, if there's like a really strong move, impulse daily candle, and I want like kind of a brain dead place to start building a position, it will be daily open, ideally a bit of a dip the day following the daily close, which is to say, if this is the bullish close, the next day starts trading at midnight UTC and there's a bit of a dip, I mean, that's where I'll try to build that position. And the invalidation will be the low of the breakout or reclaim candle. Okay. Not necessarily going to take that in this instance. I mean, hopefully there's some time. And if I take it, we can look at it as an example, and I'll try to update you on any spot or perp positioning. But just for those of you who are wondering, if something looks really strong and, you know, you say close above, close below, close below, how the fuck are those actually actionable from an invalidation point of view? Obviously, you can work your way down the time frames and start getting tighter and tighter to really optimize your risk reward. But if your priority is putting on the position, sometimes just the thrust, what's called the thrust candle low, if you're bullish, or the thrust candle high if you're bearish. So for example, if this is, say, a level of resistance and we close below it, right, like so, then the kind of thrust candle high, if you're a seller, is this. And vice versa for bullish setups, if this is a level of resistance being broken. So in this instance, the support being broken, the close is here, the thrust candle high, your invalidation, if you're trying to be brainless about it, is here. If this is a bullish setup and a close through or above resistance or some sort of reclaim or anything else, then at that point, if this is the daily close, the thrust candle low is here. And then if you want, you can, again, let me know in the comments, we can get into sort of entry techniques when you're dealing with these types of setups. So you've been eyeing a level for ages, it's just closed below it or closed above it, and you're staring at it at midnight UTC thinking, okay, well, it closed, what the fuck do I do? If you're interested in some of the potential entry techniques to be discussed in more detail, let me know, and I can make a video on them, and I can also ask Don what the fuck he does, although it'll be some esoteric thing that none of us will understand. Anyway, I think I've spoken more than enough. Hopefully some of this was somewhat helpful. If it was, let me know. If it wasn't, also let me know. Comments are good for the algo, tee-hee. Leave a like on this video before you leave. And check out Woo, the sponsor of the show. Links available in the description below. And go check out the execution analytics dashboard, the transparency dashboard. This isn't some shitty influencer centralized exchange where we get some insane commission or something. We've been with them for a while, and hopefully for good reason. This will age badly. If they rug, please no rug. Have a wonderful start to your week, and I'll see you for some show later. Bye-bye.